Welcome back to another Ticks and Trades daily recap. Today is Tuesday, May 20, 2025. I'm Sam Morton, here to walk you through how the SPY stacked up against our daily levels and game plan. Spoiler alert, none of the levels were hit, so the short answer is that no trades were taken if you were playing by the rules. But I'll show you a level that was identified in real time that worked out well for me for a quick trade that I took. We're looking at a daily chart of the SPY. They were flat during the overnight and pre-market sessions, and the bulls weren't able to get price above a zone that we identified as our axis area for the morning, so that kept things mostly flat for the rest of the day. Less than 0.5% down for the day. We'll come back to this chart later to discuss possible next moves. The daily levels and game plan from before the opening bell. The pairs of levels in similar colors, or like colors, represent zones that were apt to be important if price got to them today. The zone between 594.85 and 594.20 was the area that the bulls needed to get above to keep some momentum going, to keep going higher. Staying below would be the better position for the bulls to try to pull price down. You can pause the video and read through the game plan if you like. But as it turned out, price never even got up to that zone, much less get above it. So no levels were hit and no trades were taken if you were playing by the rules. However, if you were looking for opportunities in real time, you may have noticed what I noticed not too long after the opening bell. When price started falling, I saw that 592.20 was likely to provide at least some interim support. So I went long in that area and pulled a base hit on a handful of contracts. As you can see, that level was important a few more times as the SPY bounced off it before finally breaking through and getting below. So the game plan paid off with respect to this zone being the barometer of bullish or bearish behavior for the day. When they tried to get price up to the zone, like right here, and couldn't even hit the lower part of the zone, and especially after the second attempt over here, it's not too surprising that the bulls were able to pull price down more after that. It's just part of reading the charts and responding to what it's telling you. But anyway, no official trades for the day. Speaking of reading the charts, let's look at footage of the trade that I took, which was at that level we just talked about, the one that presented itself in real time. So price opened below the zone, below 594.20. They're going sideways, moving down, and right after 9:45 a.m., which is after that 15-minute window, looked like they were going to fall down into a level that I identified, the one we talked about, 592.20. So I went long with 6 contracts there, ended up taking 5 of those off at a pretty good base hit and trailed the remaining contract up for a few more points. You can see it get stopped out right there and kind of kept an eye out for a little while longer, decided that's all I wanted to do. It's nice to have a good trade in the bag before 10 a.m. Eastern, the first 30 minutes or so of the trading session, open session. So I let it go until lunchtime, and that was my one trade. In our playing by the rules log, we're recording no trades for the day, ending on the flat line. But in the Sam's Trades log, today's trade added a little over 4 points, and on that 6 contracts trade, the gain was $1,250 before commissions. Back on the daily chart, the SPY gave us a little doji candle, which can sometimes indicate indecision in the market. Despite the slight pullback, the SPY remains above good support levels, so there's nothing really challenging the bullish trend at this point. However, we do have some economic data releases coming out tomorrow morning, and don't forget the timing component on the weekly chart, which is something that's been mentioned in recent game plans each morning. It's probably good to remain cautious. And so what do I mean by timing? I'm simply referring to the fact that on the weekly chart, this week happens to be at a place in time where the market often does a pause and reset. So I'm asking myself if that might be more magnified on smaller time frames, if the bears are able to pull price down as the bulls take a rest. I'm not saying that it will happen. Let's just say that I'm not 100% convinced that they're finished with that trend line. They're above it now, but pulling back down to that area in the next few days and bouncing from it would probably be better for the bulls in the long term, like it would be the reset that they probably need to start another rally. The risk is that if the bears can get price under the trend line and fight to pull price down farther, that would reduce the chance of another bull rally from this area. So we'll see. These are just some musings about possibilities. If you know exactly where price is going by, say, the end of this week and into next week, I'd love for you to tell me that and explain your reasons. I do not know myself, but I do know how to find levels where bulls and bears are likely to fight it out. And it is those areas where it becomes easy to pull base hit trades in the E-mini futures. If you've been following this channel for any length of time, I hope you've noticed that's exactly what we do here. And speaking of levels of support and resistance, there will be fresh levels on the board for subscribers tomorrow morning before the opening bell. and a game plan, which should help traders prepare for the day, or the morning session at least, to try to pull S&P points out of the market. In the long term, about 80% of the days trading this way is like fishing in a barrel, if I may use a cliche. Maybe like fishing in a pool. Not foolproof, but pretty easy nonetheless. Well, that's a wrap for today's recap. Thanks for tuning in. If you found this analysis helpful, please consider subscribing to the channel. Feel free to share your thoughts or questions in the comments below. I'll see you in the next video. Have a great rest of your day.